We're in Thailand with Global Blockchain Show, and today I'm with Jitendra from HELIX.
Hey Mia, pleasure to be here.
Thank you for coming. Thank you for joining me. How is Thailand so far? Do you come here much?
I was here in April for the Southeast Asia Blockchain Week, I think, and
Same.
It has been great. A lot of community, a lot of interactions with the global community, which is here right now.
Mm-hmm. Yeah. How is the scene here for RWAs?
There have been some RWA-focused community engagement events. We ourselves did the RWA Leaders Brunch yesterday, which brought in a lot of RWA builders, investors, and partners who are providing different services across RWA spectrum. So it has been a good engagement.
Tell me about HELIX.
Sure. HELIX is a real-world asset protocol that aims to bring sustainable yields into DeFi. We bring in a comprehensive suite of fixed income instruments from real world, from private credit to corporate bonds to money market instruments, and tokenizing and bringing that on chain to bring sustainable and uncorrelated yields within the broader DeFi market.
What's the most popular asset?
It depends. Different investors would have different interests in terms of what kind of products. For example, foundations and DAO treasuries, they are mostly looking for risk-free cash management kind of solutions.
Okay.
Somebody who would be more like a crypto hedge funds or yield funds, they would look for higher yield kind of products. That's where private credit typically could bring in those kind of risk-adjusted returns. So depending on who you speak to, there'll be different interests in different asset classes, and that's why we aim to bring in different spectrum of products as compared to just one product.
Is it mostly for large companies, or is
we are more institutional and qualified and accredited investor focused at this stage. So more bringing in solutions for institutional investors.
How did you get into this industry?
So my own journey, I have been at the intersection of building products which are at the intersection of finance and technology. I started in finance in 2008 when I joined investment bank Goldman Sachs, right in the middle of great financial crisis. And then spent about a decade there building portfolio management, risk, and trading platforms for Goldman's asset management division. And then in 2019, I moved from Goldman to join a fintech startup in Singapore. We built a private credit business there, very successful. And then last year we started HELIX. The idea behind HELIX was to really bring these real-world uncorrelated assets into the blockchain rails and tap into the blockchain technology and its capabilities around tokenization, fractionalization, transparency, etc., to bring in those assets in a tokenized way.
Mm-hmm. Explain me the process of bringing these assets on chain.
So typically there'll be either a syndicated loan or a note, etc., which is then basically the investors will deploy stablecoin liquidity. They go through KYC process. So RWAs are usually very permissioned KYC product. So the lenders will come onto the platform. They go through KYC. Once the KYC is approved, their wallet is whitelisted to participate in available investment opportunities, and they will raise an indicative interest, for any particular product. After that, they sign required, agreements, etc., and then they will get access to invest into that particular product, and then the yield is, coupon or interest returns are then paid back to them in the same fashion in stable coins. So the idea is to bring assets which are typically fiat-based asset. It involves heavily on-ramping, off-ramping of those stable coins into fiat to get exposure to the underlying asset, and then we help them bringing on-chain.
What are some blockers you've experienced since you started?
I think in general, the real-world asset sector is permissioned institutional kind of products. So there's I would say when retail investors on DeFi wants to access these products, there are not a lot of avenues right now. And that's where some of the scale of how DeFi is quite fluid and composable with each other and all of that, those kind of constructs are yet to come in the real world asset sector. It's quite permissioned and accredited in that sense. So that creates a bit of friction point in some cases.
Like regulation.
Regulations is a big part of it. These are all regulated products which requires KYC, AML, those kind of checks.
Mm-hmm. Is there a region that you have more traction in terms of getting clients?
On our side, for the deal origination aspect, we are very active in Southeast Asia. When it comes to liquidity providers who do deploy liquidity, they could be coming from a broad spectrum of investors. Typically, most of the RWA protocols, including ours, we don't look into certain jurisdictions. Obviously, sanctions jurisdictions are away, and also some other geographical locations globally.
Mm-hmm.
Yeah.
What was the appeal coming on chain?
I think it's the if you look at some of the projections around tokenization of assets, BCG did a report, and there are multiple banks and publications have done a lot of research, and there are projections that it could be like 16 trillion plus kind of assets that could be tokenized and brought on chain. And there's a lot that could be leveraged in terms of the technology around, particularly for asset classes like private credit, which doesn't have a very solid Web2 infrastructure anyways. When it comes to stocks or bonds, there's already quite a bit of infrastructure which is available on Web2 rails. But illiquid asset classes like private credit, they could be significantly benefited from potential secondary liquidity avenues, potential fractionalization of those assets, etc. And that was one of the reasons.
Do you expect a certain asset to have more interest next year?
Yeah, I mean, if you look at the current wave of adoption in real world asset spectrum, it's mostly risk-free T-bill kind of products. The first RWA was stablecoin itself, and stablecoin market cap is now close to $175 billion. The next wave, which we have been seeing in the last 1 year or so, is tokenized treasuries. And that market cap has now reached to, I think, $2.5 billion of tokenized T-bills available, all the way from the likes of BlackRock's Biddle, Franklin Templeton's Benji, Ondo has done a build on top of the BlackRock's Biddle offering, and a few other players. So that has that's where we have seen the initial set of waves, stablecoins, treasuries. I see that going forward, as the Fed rates start to go down, there will be more and more interest in the next spectrum of slightly risk-adjusted return asset classes like private credit, which is poised to grow and get tokenized on chain.
Mm-hmm. Yeah. For context, like how big is your team?
We are a core team of 4 to 5 members in Singapore, and then spread across a distributed team remotely in several other regions.
Mm-hmm. Yep. How do you see like the elections in the US like impacting the industry at broad?
Broad views?
No, I like think the industry in general. Yeah.
Yeah, I think there's quite a bit of positive mood, as we can see. Over the last 1 week, Bitcoin has crossed all-time highs. So there's quite a bit of upbeat mood in that sense. Mm-hmm. But I still think things like particularly in the RWA spectrum, things like regulatory oversight and all of that would continue to be there. But in general, there seems like there is that feel that maybe there will be a bit more of collaboration to come up with regulations which kind of are in tune with the kind of technology that blockchain brings in, and we will see more of that collaborative approach, hopefully.
What's your judgment on MiCA, the European? You don't know about it. The regulation in Europe.
Yeah, without going into any specifics, some of the jurisdictions in Europe, like Switzerland, for example, have been at the forefront when it comes to, creating a full-fledged DLT-based, distributed ledger regulations. Other jurisdictions like Luxembourg, for example, have quite a structured regulatory regime in that sense. There are a lot of tokenized offering which are coming from Luxembourg and those regions. So it has kind of provided a framework which many other regulators are looking as well. But it's a quite a broad horizon when it comes to how each regulator is seeing at the specific sector.
Mm-hmm.
Yeah.
How do you see this stuff evolving? I mean, if we are to become mainstream at some point, and I feel like crypto has won many battles. We've been slowly but surely moving things.
Mm-hmm.
I don't even think it's slow if you think about it. But it feels slow if you've been in the industry for a while.
Yeah.
How do you see? I mean, government is going to have it. Like if the push is so strong, it's almost like a revolution,
Mm-hmm.
and government is going to be forced to adapt to it. How do you see this playing out? Like from your perspective, do you think governments are going to push back? Do you think they're going to try to find as much collaboration or get into positions of power within crypto? Like, what's your...
I have a very different view maybe than about this particular topic. I see that what blockchain brings is a technology layer, but the fundamentals of finance doesn't change. I foresee KYC, AML checks kind of, becoming mainstream within crypto, where right now it's a lot of permissionless participation.
Yeah.
The market manipulation is something, regulators would be looking at as the adoption increases and goes, really mainstream. So those kind of aspects, that's what I say, like the fundamentals of finance would never change. It's just that, blockchain is bringing a layer of efficiency, and
Mm-hmm.
it does bring, if all of the financial rails are running on blockchain when it comes to, settlements of trades, etc. Right now, in the traditional world, sometimes like even for stocks, the trade could settle in T+1, T+2. There are different ledger entries of these trades. All of these could go away if, the entire financial infrastructure is running on blockchain. So those things will happen, but as the adoption increases, so the regulatory oversight as well. That's how I personally see it.
Mm-hmm.
And which in ways would be, it's good to have some of that, to protect investors, to avoid cases of rug pulling and all those, like market manipulation. Manipulation is something which I think regulators will start keeping an oversight on.
Mm-hmm.
Yeah.
I think that for example, with the Argentina, like the government being super aligned with crypto,
Mm-hmm.
Which then you could compare it with, like how strict China can be with certain things. I think this plays a strong part on technology development and adoption,
Mm-hmm.
but also like how fearful people are of things versus having a sense of discovery and freedom. And to my view,
Mm-hmm.
this duality might become stronger. Like I agree with you, like the sensible middle it could be it could be likely to happen in places like Switzerland or like smaller countries, but I do wonder that if depending how the country is governed,
Mm-hmm.
And the interests,
Mm-hmm.
and then I guess like its population's persona.
Mm-hmm.
Say like France has the sense of like the population tends to be, more towards putting their voice out.
Mm-hmm.
So I do wonder how that will play out, because I think also then there's the dynamics of countries influencing each other. Do you have like I say like more of a macro view on this?
I think I again see it from RWA perspective and regulations and KYC
Right.
and AML. I think it's good to have those, but there could be better ways of doing this. For example, these zero knowledge proof, ZK proof kind of KYC constructs, which was
yeah.
previously not there, but now with crypto, there have been these kind of new constructs and ways coming up. It'll take some time for regulators to maybe get to that level of adoption. But I think those would be the ways where, think of it this way. Right now, every company, for example, who's doing financial business, they need to do KYC, AML check.
Yeah.
It would be great if there's, there's like some centralized body which has done the KYC, and, every protocol or every company which is working on that, they could tap into that through APIs, etc. So, all of these inefficiencies of everyone need to do the exact same kind of KYC probably could be, made more efficient with increased familiarity of many of these Web3 construct by regulators. And my views probably more align on those fronts.
Mm-hmm.
Yeah.
When people consider getting more exposed, I guess in this case, institutions getting more exposed to RWAs, why should they go with HELIX?
I think it's it's more of this. The underwriting of credit is extremely important. It's very easy to deploy capital, but what kind of risk management measures people are taking around it, and we kind of built and grew in this fintech startup where we build a lot of credit analytics kind of technology to do the risk management and credit underwriting capabilities and all of that. And those are the kind of things that we could bring onto the table when it comes to bringing these well risk managed credit opportunities on chain. I think, and that's what eventually people will start looking at when it comes to how well the risk is managed, how the default risk is managed, what kind of credit underwriting structuring is there, and all of that.
Mm-hmm.
Yeah.
So as the year progresses, I mean, the year is finally it's getting to an end now.
Yeah.
Next year, what do you see happening? Some predictions there. What do you think is going to happen in this industry?
I think more and more tokenization play will come into picture. Many financial institutions have started doing tokenization of a pocket of their asset classes.
Mm-hmm.
We see, obviously, BlackRock has done it. Franklin Templeton has done it. Goldman Sachs has announced they are going to do 3 different tokenized products. UBS has recently tokenized one of their money market offerings. So I foresee that more and more of these traditional financial institutions would go and probably bring certain of their offerings on chain, which is a great thing because that kind of increases their familiarity with how things work in Web3, and eventually that may lead into a broader adoption. Right now, what is happening is most financial institutions are taking up part of their product and then tokenizing and then trying to bring Web3 native stablecoin liquidity into those products as compared to deploying liquidity into Web3 products. Which still is good because at least they are understanding how it works, and then maybe with that will come the next phase of evolution in terms of more of a broader adoption. They may do it within a permission blockchain maybe, or a blockchain where there is anonymization of data, etc. But I do foresee that trend going to just go in a positive direction.
Yeah. Is there anything exciting coming up for HELIX?
We have a lot of new product offerings which are being to be brought forward into the ecosystem. So I would just encourage audience to keep watching out for our blogs and social media handles to look out for those.
Yeah. And for everyone watching, where can they find you?
You can find me on Twitter at GS Jaitawat, similarly on LinkedIn as well. Yeah, GS Jaitawat.
Jitendra, thank you.
Okay, thanks a lot. Good to be here.
Thanks.